This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices sharply higher today. In fact, all of the financial markets are being affected by the apparent easing of tensions in Ukraine. Also, we did have the S&P 500 futures advancing to new historical highs this morning. So nothing changing in our view there. We continue to believe that Fed policy will remain accommodative. We also continue to believe, which is a minority view, that later this year the Fed will be forced to halt the taper. Of course, that puts downward pressure on U.S. interest rates, which in turn is bullish for stock index futures, not to mention the QE that remains in place. So the main trend for stock index futures still appears to be higher, and I think this is a longer-term trend. Over in the currencies, the flight to quality currencies, the dollar and the Japanese yen, although they were stronger yesterday on the Ukraine situation, these currencies are lower now today with a liquidation due to an easing of tensions in that part of the world. Also, we are seeing a little strength coming into the Australian dollar, this after the Reserve Bank of Australia leaving their key interest rate unchanged at 2.5%. That was generally expected. So from here, I would expect lower prices in the dollar index. We feel that short-term U.S. interest rates are likely to come under downside pressure. That, of course, is bearish for the dollar. So more of the same we are anticipating in the dollar index, looking for lower prices. And in the interest rate markets, some of the flight to quality longs that were purchased over the last couple of days in light of the escalating tensions in Ukraine have been liquidated today with an apparent easing of tensions there. However, that leaves us with the situation where we believe most economic reports will come in on the weak side. We feel that, as we mentioned earlier, that the QE taper will be halted. That is a bullish situation if that does come to pass, which we think will be the case. So from here, I would expect higher prices from these current lower levels for treasuries. Longer term, it also looks like treasuries will continue to advance. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.